Good morning, everybody. Welcome to the F.A.C.E show. Good afternoon to those of us in the UK, those of you in the UK, Europe, and elsewhere. I'm stepping in for Blake. He's got another appointment over at Ninja Trader, so he's doing that. Lots going on at the moment. We've just had the Bank of England taking a pretty dovish tilt. Finally, for once, maybe trying to get ahead of the curve instead of being dragged along behind it via their necks round the back of the car, as usual. So we've had a definite swing dovish from the Bank of England. A 5-4 vote to keep rates unchanged was expected in at 7-2. I thought 6-3 was possible, but we've got the most dovish outcome. Inflation forecast cut, growth forecast cut. Pretty much what I've been expecting from the economy since last summer. So, as I say, the Bank of England finally catching up. We've seen a bit of a move in the quid as well. We also had some jobs data out of the US Challenger layoffs showing 108,000 layoffs versus a prior 35,500 layoffs last month, the biggest January jobs cuts since they started the survey in 2009. That's put a little bit of a wobble under the dollar as well. In 14 minutes, just under 14 minutes, we also got the ECB announcement coming up. So I'll have to keep my eye on the clock for that. But we've gone from 0 to 60K this morning.
Yeah. We had this started yesterday with the political move in the sterling, and now on top we have a dovish Bank of England. What's not to like for the sterling? Yeah, went from one of the better currencies to I don't want any of it anymore in the space of less than 24 hours. Yeah, I mean, Bank of England was a bit of a risk that they went on to the dovish side, but the 5-4 vote was even more dovish than we would have expected. Does that tell us that Bailey is the next one to flip over the next meeting? Possibly. Over what we heard in his press release, trying to do a Powell and walk all possible sides of the lines. Also talking about the lower they cut, the less that they will cut, which is quite a bit of kicking in an open door, I would say. But yeah, I mean, sterling really lost its appeal over the past 24 hours. So I guess that unless we see something really dovish coming out of either would it be the ECB over the meeting or more numbers as we've just seen of the Challenger job cuts spreading worries over the US economy. Cable could be in for a little bit of a dump later on again today.
Yeah, and the pound's probably got a bit of movement to do as well. And this is a trade I've been looking at in particular, being short the quid, as I said, since last summer, because one of the reasons was the Bank of England staying behind the curve, and I'm expecting the UK economy not to do too well in the early part of this year, well through most of this year. And I thought they might be forced to play catch up, but that trade it did all right, but that might be a bit of a narrow path to get further gains in something like euro sterling on the back of a weak quid, because the market is now going to readjust its price into this dovish tilt.
Yes, but I think the political scene can come to help there to continue to weigh on the sterling, perhaps. Well, it's been some turnaround. I also think that if you look at how the sterling behaved over the past weeks, let's say, being one of the better currencies across the not only versus dollar, but across the other currencies sphere in the other currency sphere as well. There may be some adjustments to be made to that, and we know how the sterling market is one of those emotional markets where the market, if it swings, it can swings relatively hard. So personally, I reckon that we have found some sort of a tipping point there, at least in the shorter term in sterling, and I think sterling rallies are probably going to find a few sellers now for the next sessions.
Yeah, I can agree with that. As far as euro sterling goes, we're still in this downtrend, so it's still valid. I'm not saying
Yeah, I mean,
that our thoughts of being long euro sterling are over, but it might just be a bit harder work now.
yeah, I was taken by surprise by the move yesterday, to be honest. I didn't catch it. Yeah, we have this downtrend here, and if you just put a simple line over those two tops there, with the last one just at the start of 2026, mid-January, it's around somewhere 87.15 again. I mean that that level that's has shown up all the time. That 87.15.20 is probably going to be key if we talk in euro sterling terms.
Yeah, absolutely. I can agree with that. Stel, you're here as well. So good morning, good afternoon to you, mate. You got any thoughts on the Bank of England and what's just happened?
Well, they're how do you say, between a rock and a hard place. I mean, they have inflation is over 3% and has been for the past year. Um, but like you said, they're probably behind the curve, given the potential developments in the UK economy. So what do? Do they target inflation and stick, or maybe even hike, or do they try to anticipate a decline in growth and in inflation and cut preemptively? Well, they're very close to cutting now, right? 5-4 split, and I really wouldn't want to be in their shoes, and I've never wanted to be in the shoes of the Bank of England because they've had a very, very difficult job over the past, decade or so. But I mean, it's a tough one. One thing's for sure, I think the pound will, likely continue to underperform in the short term, and but then after that, who the hell knows? But I didn't expect a 5-4 split. I don't know what if you guys. I didn't actually go into the chat room this morning to see what people were saying, but it was a bit of a surprise, wasn't it? The
Yeah,
split.
I thought we might get a 6-3, but I wasn't expecting a 5-4.
Yeah.
Obviously, it's possible always, and that was the most dovish scenario. But yeah, I thought 6-3 and a bit of an unchanged. So they must be panicking about something. I mean, they slashed next year's CPI forecast from 2.5 to 1.7, and that's a big old chop for
How's that
for
gonna
forecast.
happen? How is that gonna happen?
Well, the economy doing pence for starters
Yeah.
is likely, but in one aspect, they've just shifted the risk the other side. If the market's going to settle this way now, and if inflation doesn't come down as fast as they expect, or if the economy doesn't, underperform or perform badly, then they're going to be left chasing it from the other side. But like you say, that's their job. That's what they're up to.
Yeah.
But yeah, and just to bring everyone else up to speed, spoke about this in depth on the Flow show. We do have some political shenanigans going on here in the UK. Excuse me, Starmer is in some hot water at the moment, which will bring some questions over his leadership and as to whether he can stay in the job. The chances are he'll get over this hump, but the focus will be on May when we have these local elections, and everyone will see how good, bad, or ugly Labour and his government perform at those elections. So that could be the final tipping point. But this is politics. He could be gone by next week, the way things happen over here. So that's been a reason why we saw that jump up initially in euro sterling, the pound getting sold off, and a bit of selling in gilts this morning as well. Right, we need to move on. We've got 6 minutes to the ECB. Still, while I got you on, what are your thoughts for Miss Suntan?
It's something. Well, I don't think they're doing anything today, although there has been, given the Bank of England surprise, you never know. But I don't see anything diverging from what they've been uh, telling us over the past few months. And let's face it, is inflation in the eurozone is a lot more stable, a lot closer to target. So if you take a few steps back and you look at what the ECB has been doing, it's job well done so far, because they are containing inflation and trying to keep employment as although they don't have a dual mandate, they are also trying to keep employment at a pretty decent level. So I don't see any surprises. I don't know what you guys think, but I really don't.
Yeah, I'm in the same boat. I expect to hear some victory laps about how inflation is near target, how rates are where they want them, everything's happy and dandy, and the economy is resilient. So it should pass by this meeting without much fuss, but Lagarde's got to fill the airtime somehow. Kay, I know you've got similar thoughts on the ECB, but after the BOE, can we expect any shocks?
I don't think so. I think it's still an autopilot meeting, and never say never. I mean, inflation dropped a little. Can she talk about that? She's probably going to be asked about that, about the level of the euro as well. But I don't think in Lagarde's mind that the level where we are in euro is that much of an issue to push inflation further down. But I wouldn't expect so unless we do another 15, 20 big figures. No, yeah, maybe the inflation under target, and she's probably going to say, "Yeah, we're in a good place." And so for me, it's really, or it should be at least, an autopilot meeting. Really, the ECB. You were talking about the replacement of the Windows for a starter, I think, but is it really going to change much? Is much of the questions, he's probably going to thank him and say welcome to the other one, and that's about as long as she will take over it.
Yeah, exactly. But you made a point about any mention of the euro at 120, that if Lagarde brushes it off and says, doesn't push against it at all, we could see maybe a little blip up in the euro.
Yeah, algos will algo. That would be the little blip that we can see, and then we will have, if we get it, we will have to see how the euro reacts around that 118.25.35 again, which is the level that capped the last time up there. But I mean, not seeing a problem and saying it's okay for the euro to go higher, there's still a step to be taken in between both, right?
Yeah. Mike, you're asking, can we go over the euro dollar chart? There you go. There it is. We're 117.75.80 to 118.30.35. We've got just under 4 billion expiring at 118 today, which will happen approximately 30 minutes after the ECB presser. So there's a euro dollar chart for you, mate. Not a lot going on. We are glued around that big figure at the moment. So really what it's going to be for later on is if the dollar is moving versus other currencies and this one is staying glued, then it may play a bit of catch up after that expiry passes. So that would be something to keep an eye on there if you're looking for a trade in the euro. But other than that, it's going to need something to break us out of that range, I think. But we'll see what the dollar has to do. Right, we've got just under 2 minutes until we get the announcement, so we'll keep an eye on that. Still, we're getting the data now, jolts later on, and finally confirm we're getting NFP next week. Do you see any wobbles coming from that we need to keep an eye on?
I can't really make a guess. It's guesswork for me, so I really don't know. It's a good thing that we're going to be getting the numbers, and it's a good thing that the shutdown has been averted, let's say. But no, I mean, I don't know what the number's going to be, and I just react to them. So, but the trend is that employment is, slowly but surely weakening, and we wait to see what damage AI does to the global workforce.
Yeah, exactly.
I fear for what my daughters. I have 2 young daughters. I fear for what kind of world they're going to be, entering when they leave university, whatever they study. So I don't know what kind of jobs are going to be there.
Plumber, mate, electrician. They're all going to need to have their wires redone, AI, whatever. But I think instead of being an AI programmer or whatever, it's better to be an electrician because they're all going to fail at one stage over there.
Infrastructure, right? There's going to be infrastructure.
Yeah, call it infrastructure.
Or OnlyFans, those two. Oh my God!
Oh,
sorry,
wow.
I didn't say that. Let's erase that.
No.
Yeah, I hope your wife ain't listening to that.
I'm already afraid to ask Steve what he thinks afterwards.
No, we're not. I'm going to mute Steve on purpose.
Why?
Here we go.
Okay,
Why,
here we
guys?
go.
Why are you?
Unchanged.
Oh, big
Anything in the text? not pre-committing to any rate path, determined to ensure that inflation stabilizes, blah, 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 blah. Data dependent, meeting by meeting, blah, blah, blah. Right, that's that done until the press conference later. So, oh, look, what's Euro done? Oh, let's have a quick look. I'm going to stick it on the 1 minute chart, Kay.
Yeah, no, go tighter than the 1 minute. It's the micro charts that we
look
need
at that.
right now.
We've had a 6 pip move. Woo! Come
All
on,
right.
game show.
These are the real moves.
These are the real moves.
The ones you're getting excited about, Steve, with your 30-year long
Absolutely.
positions? What do you reckon, Steve? What do you
I
make
trade
of
them
what's
with
going on now?
100x leverage.
What do you make of what's going on now, Steve? And you know what? Let's have a look at what the metals are doing, because they are moving. They are
Oh,
really
yeah, they
moving.
are.
I don't know if you listened to any of the flow shows or saw the updates that I did and that Blake was doing. We're looking at that quite wide range potentially starting to form somewhere between 4,400 and 5,100 in gold. I think silver is even wider, between 70 and 100, to take a new direction. What's your thought about what's been going on all those metals?
Give me a second, mate, to mute the...
New OnlyFans.
Yes, absolutely. Because she was very loud. Okay, ask again, because I had the
No, I said
squawking in my head non-stop.
Yeah, because I know, and we all know that you're watching them quite closely. So we have been talking about those metals potentially seeing some failure to go higher again, which we saw again. But then I'm kind of looking at, let's say, on the wide-ish right now, gold 4,400, 5,100, 70 to 100 in silver. What's your thoughts?
I'll tell you what I was telling our members in the morning ads.
Yeah.
Since the event, and by event I mean the price action we had on Friday, right, on the past Friday, I told them that in my opinion the trend is now broken, right? And I told them that I'm looking for a corrective rebound that shouldn't exceed the 61.8. That was what I said initially in the week. Then yesterday, during the morning edge again, I was talking with people, telling them that in my opinion, it's about time that we are going to be running out of steam and we're going to be turning lower again. And specifically, I mentioned the divergence between silver and gold. Silver had barely managed to retrace 38.2, while gold made it closer to the 61.8, which showed that, in my mind, that the downside is going to continue to be more brutal for silver. And indeed, today we are confirming that failure from the 38.2 at 90.5. And we should be back to what is the first important support area, roughly at 70 soon.
Yeah.
What I also have been telling people since the beginning of the week is that they should be very, very careful in positions with metals, adjusting their leverage, because obviously after that event, volatility should stay a lot higher than it usually is. The market is going to need some time to absorb these moves and slowly but steadily shrink volatility to a more normal type of a range.
Yeah, that's about my thought with those ranges as well. You have this huge correction, then you come back to a certain level. 5,100 was the one I kind of we all noted actually around there, which capped, and now we are going to see how the volatility probably very, very slowly ebbs, unless we break below $70 in silver, for instance, which then could see another pretty violent 20, 25 bucks perhaps to the downside, which in my opinion would then be the end of whatever sell-off we could have lived until then. But I found it quite interesting that Asia, which was one of the main participants in the rally of the precious metals, was hammered the silver so hard overnight, taking it down from 90 to nearly 73 bucks. That's a big round of profit taking, and I think a lot of people may slowly be kind of done with all their profit taking or getting out of too late, too high positions, perhaps, because that was a pretty big dump in Asia.
Yep.
All right, maybe we can move on to something else, Ryan.
Yeah, that's it. The one time Steve has nothing to say.
No,
Oh,
that's
come
fine.
on.
That's
I
fine.
said quite a lot about the medals, didn't I?
Yeah.
Okay,
You did.
let's throw another one in your
And
basket. I'm
yeah,
going to throw. Go on, mate.
and don't start him on Stelios's studying plans also.
I'm going to get him started on Bitcoin because I'm sure he's
Now.
got
Oh,
Oh, take
You
it
don't-
from
you don't
Bitcoin
wanna do
then.
that.
No.
I've done a 1 minute chart. I've done Bitcoin. I might even do Dixie in a minute, and that'll be
Yeah,
it.
then see you tomorrow, guys.
So what do you make of this? This is in a bit of trouble at the moment.
Cryptocurrencies do indeed seem to be on a downtrend. We started diverging in comparison to other risk assets, which is unusual. Then we created both in Ethereum and Bitcoin, because these are the only ones I'm looking at. I am not really looking at the smaller ones. We created corrective moves both in the form of ascending channels, from which we broke down a little bit later than the middle of January, and we're headed lower again. So admittedly, they don't look good in the short term. If we're talking about Bitcoin, we also broke through the 44,500 low that we saw last April. So a lot of people might not have realized, but we in essence are currently trading at something like 15 month lows, and we've gone from 126,000 down to 70,000. And in my opinion, there is the potential for more downside. The next big area I would be looking towards, if we're talking about Bitcoin, is roughly the 60,000 area.
Yeah, that's right. In against close to that fib and some prior support that we've had down there. So yeah, certainly been a big move, and catching a few people on the hop. All the hodlers and the BTFDers not doing too well in this one. But Zhao says it's going to turn at 69. Well, we're what are we? 286 bucks, 270 bucks off that, Zhao. So we'll find out whether that turns or not. Still, you got
Guys,
the,
imagine what would have happened if we didn't have cryptos incorporated now with ETFs and a strategic Bitcoin reserve and a very positive crypto president, etc. Where would have these been now if we had a different president? That's a good question, isn't it?
I would have got my Bitcoin at 30 bucks.
No, you wouldn't, because I was bid at 32.
I'm not necessarily sure, Stelio, that it would have made a difference, positive or negative, to be honest. I know what you mean. Yes, if there was somebody that was negative, but at the end of the day, Trump said a lot, right? A lot to support pre-elections as well, because I think he realized that a lot of the cryptocurrency crowd are more inclined to vote for him, so he wanted to give them an extra reason to do so. But actively speaking, has the current administration done something, to really change the dynamics from cryptocurrencies other than rhetoric? I don't think so much, mate.
Yeah.
No, I think I
Oh,
could
well.
agree with that. I think I can agree with that. Right, we're all waiting for
And
the
and
guys.
and talk is free, right?
Yeah.
Also, as well.
Yeah. It doesn't
This
cost you
this
anything to speak positively about something.
Yeah, exactly.
okay.
Go on, Kate.
Yeah, I mean, we just have a couple of more data out before the press conference start of the ECB. We've got a bit of claims. And Ryan, you made a valid point this morning on the Flow Show that we may see a bit of that cold spell shutdown slash shutdown also impact in those numbers.
Yeah, the weather last week obviously can affect these weekly claims numbers, so we could get a little bit of skew in there. It might be that we get a low one if people weren't able to file claims. So just something that may crop up when we get those jobless claims. It might get the algos working a bit. If we get a low one, that will obviously see the dollar rallying a touch, perhaps. Something to keep an eye on. Other than that, we don't have anything else until Jolts later on today. That data's come back in. Just in case you didn't know, the non-farm payrolls is going to be next Wednesday, but they've also kicked the CPI data for next Wednesday to next Friday. So we're getting the data anyway, but NFP is coming next Wednesday, the one we missed before. Kay, anything you want to look at on the charts?
Yeah, Jolts is delayed compared to, for instance, the challenges. We won't have the impact, right?
Yeah, Jolts is always a month behind, so that's
Yeah.
December data we're getting today.
Okay. Well, I can show just the one because this is one that we haven't spoken about on our Flow Show, and that is Mexico. We do have Banxico tonight as well. They are expected to keep their hands still. They kind of run a similar kind of or a parallel with the Fed rates in their proximity. Obviously, their inflation dynamics are a little bit different. Their growth dynamics are a little bit different. But we have been watching this dollar mix right in this zone here, and you can even go further back. Down to even 2016, 2017, that zone we are in now. We also saw that it was a big traffic zone somewhere in 2023. Okay, with a few breaks below or above, but it's always been a traffic zone between 1710 and 1740. We do have those longer term trend lines as well. Excuse me, coming in there. So we have Banxico tonight, and so expected to keep their rates at 7%. Their inflation hasn't materially changed much. There's been a bit of a blip up, blip down, but also always kind of around where we could have expected it to be. So I'm not going to expect any fireworks, but we also know that traditionally emerging market currencies are a bit linked to what's going on in risk. We are seeing, for instance, equity markets coming off a little bit. So we are hanging towards the top end of that traffic zone right now. We just shied away from it, but we just traded up at 1740. I think that's going to be pretty important already enough when we come out of Banxico, depending on where we are in the rest of the dollar pairs, obviously in between, once we are going to get the claims out, the jolts out later, where the dollar pairs are going to be trading. But it's going to be an interesting watch again. Call it 1740, call it 1742. That's going to be an interesting level to watch on the mix. If we close below, we probably are going to continue to trade this traffic zone for a while, for as long as it stays above 17 figures, 1710 as well. Interesting to note though, is despite whatever happened on the rest of the currency pairs, the Mexican peso has been one currency that, if you compare it to other emerging market currencies like the more general ones, even though the pictures are completely different, but like Rand, dollar mix has been coming down in concert, even the dollar China, if you think about it. But the mix is holding its own a little better. So if we get a report which is not too bad, or not too dovish, I would say, the MEX could continue to be fooling around in this range until we get a clear break. Okay, we know that Mexico is always trying to remain on the right side of Trump and his administration opinions, so that's probably been helping, as well as their high yield status still. So that is something that I wanted to tell going into the Mexico tonight. And with that, Ryan, I don't know if... Oh, we had the numbers out.
Yeah. Sorry, I was going to say jobless claims 231. I'm going to nick the screen back quickly, Kay.
Go for it, mate.
231k, continued claims 1.844. So doesn't look like there's any wobbles in there. And yeah, round about what we've been seeing for the last few months anyway, around that 200 mark. Right, we do have Jamie McGeever in the house. Blake will be along shortly. Let me just promote Jamie while we're going on, because I actually want to ask Jamie a couple of questions while he's on. For those of you that don't know, Jamie's a journalist at Reuters. As you can see there, he's keeping everyone up to speed on things. He knows his onions, most definitely. So while we wait for Blake to come on, and let's just see if Jamie's... There he is. Morning, Jamie, or afternoon.
Morning, Ryan. How are you?
How's it going? All right?
Not bad, thanks. Listen, do you want to see me as well as hear me, or not? Or is
yeah, we can do. Yeah, Blake will be along in about 3-4 minutes. He'll do the main part of the interview, but I wanted to just bend your ear quickly. Obviously, you're well, it says you're back in the US again, and you're keeping up to speed on US markets. But we've just had this tilt from the Bank of England, and we got this political guff going on. So I just wanted to grab your quick thoughts of that, if you've got some.
Yeah, well, I mean, obviously, stating the obvious in some ways, but the vote was quite tight, 5-4, I believe, and that was much closer than what people thought. Given what the Bank of England said about the labour market, the spare capacity in the economy, inflation targets are going to be met pretty soon, it looks like, and growth forecast cut. I mean, it all points to rate cuts, doesn't it? I mean, I think the guys at Deutsche Bank are still going for 2 cuts, March and June. I'm just looking at the strip, and it looks like that's roughly where the futures, the rates market is as well. 2 cuts by the end of the year, so we'll get down to 3.25%, and that seems to be, generally speaking, where the bank thinks neutral might be. So yeah, I mean, it's a fairly dovish statement. I think. Is that kind of what you're sort of seeing? I think we should probably see people come off a little bit. Yeah, here we are, 10.5%.
Pretty much. Pound's taking a bit of a hammering. So okay, that's what they think. What do you think? Do you think they're getting it down there, or will they have to go further?
I think, given the start we've had to the year in terms of not just policy, but markets, geopolitics, geoeconomics, everything that's going on, I think it's very difficult to predict where we'll be in the summer, never mind the end of the year. So, I mean, genuinely, and I think just on the policy side of it, I mean, look at the RBA this week. Was that only this week? It feels like a lifetime ago. Yeah. The RBA raised rates, and they're pointing to hikes. And I'm just looking again at the Aussie strip, 2 hikes priced in for this year. So there does seem there's a lot going on. Everything's in a state of flux. So I think we can only go by what we're seeing now, and I think it's a pretty dovish steer from the Bank of England. That points to obviously more rate cuts. Whether they still think like that in March or June, I think is anyone's guess really. But I think we can only. I think everyone's visibility is, pretty short.
Yeah, exactly. I don't know if you've been keeping your finger on the pulse with the politics going on here at the moment. Maybe where you are,
well,
choosing to ignore it, far from home. So, what do you make? Is Starmer potentially?
Well, interestingly, now you mentioned the policy, I just saw a headline on my screen a minute ago from Bailey. He's obviously doing his press conference. I'll see it. What did he say? I think we just snapped him saying, Bank of England's Bailey, we don't spend our time discussing political risk. That was about 3 minutes ago. So listen, I suspect they must discuss things behind closed doors. Maybe they don't officially discuss it in their policy meetings, but it's pretty hard to ignore, isn't it? If Starmer was to wobble or be ousted, how can that not factor into policy making? It doesn't make sense to me. But the political risk is certainly on the up, and if Starmer was to go, taking aside whether you think that's good or bad for the country in terms of markets, it's a little bit more instability where maybe a bit less instability would be would be required.
Exactly.
What does that mean for the public finances? If we get, I don't know who would come in his place. And I think political instability is. I think we need less of it, probably not more. Although having said that, markets, up until last week, were sailing. All-time highs on equities, credit spreads were tightest in 25 years. Bond market volatility was the lowest in years. Financial conditions are loose. So, it's in some respects, the global macro picture is reasonably healthy. Given even taking into account all the political noise going on, and there's a lot of it.
Yeah, part of the course in the UK, isn't it, that all that can be undone in the space of 2 days and blown up. Interesting what you said about Bailey. I see Blake here. I will let him come in a minute. Bailey also endorsed Kevin Walsh during his presser just now. So
you won't be going to say no. I think that's a terrible appointment, and we at the Bank of England don't agree with that.
Exactly.
I mean, we've had everyone from the IMF to all the Fed people here and the ex-Fed people here and all the policymakers, the great and the good, if you like. They've all endorsed them, as you'd expect. I think that's fairly standard. It'll be an interesting one, and will he be as hawkish as his previous record suggests? Although Trump, I think it was only yesterday. Seems like days ago. Trump only yesterday gave an interview to, I think it was CBS or NBC, saying that essentially saying, and I'm paraphrasing, but not much, that he gave Walsh the job because he got the indication, got the nod that he would cut rates, and if he didn't give him that indication, Trump is, he wouldn't have picked him. So
that means he'll be sacked by June. He'll be out the door by June.
Well, that's an interesting one because if he can't manage to get the rest of the FOMC to cut rates, and there's good reason to argue, as we might discuss, there's good reason why the Fed maybe should not be cutting rates. If he can't get the committee to keep on easing later into the year, then Trump has a ready-made scapegoat. Clueless Kevin.
Exactly. Right, thank you very much, mate. Thanks for that, and I'll bring Blake in now because he's probably busting a gut to get in here and lob a few questions at you. So,
busting a gut? I don't know about that. I bust a gut for other reasons, probably too many hamburgers, but not.
Not for me.
You guys are doing great.
Yeah, I had to get a few questions in before you turned up.
All right. Well, appreciate it. Yeah, appreciate it. And I was going to say thanks, Ryan. Thanks, Kman. Thanks, Steve, for being here. And holding down the fort with the F.A.C.E show. Yeah. So, hey guys. And Jamie, good to see you, man. Hey, what's the body count? I want to ask Ryan, Jamie, while you guys are still here, what's the body count for prime ministers in the UK over the last 10 years? You guys got a number for us?
You mean how many women they've been with?
Well, I think one individual might skew the stats on that one. I don't know, 5 prime ministers in the last 10 years. May, Johnson, Sunak, who are we now? Starmer, Truss, of course. That's 5, I think.
Yeah.
Wow, that's like literally like a political circus car coming your way.
Always.
It's crazy. Sometimes I wish we could do that too. I mean, in the United States, we would definitely have cycled through a lot more than we have over the last, 20 years, I'm sure. So
you're going the other way. You're going the other way. Elections may not even happen at all.
Yeah, I mean, hey, you never know. I mean, maybe we might even stop having elections here in the U.S.
There you go.
Yeah, but hey, I'll take over from here. I appreciate it. And let me grab the Let me grab the charts really quick, and I'll grab the screen from you, Ryan. Jamie, you know, we are obviously we're seeing a lot of volatility. You guys were just talking about, you know, Warsh. He's got to get the support of the rest of the Fed governors. But you know, we saw a couple ugly pieces of labor data today between the Challenger jobs report. Now I know the weekly unemployment claims. Maybe it's because of the weather. We still have a really nasty cold snap here in a lot of the United States. I don't know if maybe that's the reason why, but you know, I guess if labor data continues to weaken, and we'll see the jobs report actually on Wednesday, but if labor data continues to weaken, will we see a continue? You know, maybe the rest of the market will start looking at you know, the Fed is all, you know, kumbayaing and maybe cutting rates gladly, you know.
It's a tricky one, isn't it? Because for the last 6 months of last year, Powell made it quite clear in his press conferences, post meetings, that the labour market was the Fed's lodestar, if you like, and policy was being predicated. You know, if you've got both sides of the dual mandate, jobs, employment, and inflation, the Fed was definitely leaning more heavily on the labour market side.
Yeah.
That shifted. I think that shifted certainly from the press conference in December. That balance had tilted unquestionably, and with inflation at sticking around 3%, Powell's made it quite clear again that inflation might be the Fed's lodestar for just now, anyway. And he said that the labour market is in a reasonably healthy state, or relative to what they feared, whereas inflation is just it's not coming down as quickly as they thought. And I think the PCE numbers next week, whenever we get them, will show headline and core at 3%. Inflation's been above, you know, as we all know, Fed's target for 5 years now and counting.
Yeah.
And interestingly, some of the online inflation numbers we had this week, Adobe, I think, put out their numbers for the first time since their index. They've been constructing their index first time in 12 years. Online inflation is the highest since they've been doing their index. So, you know, all the signs are pointing to inflation staying high, and as you say, some labour market indicators are on the weak side. But when you've got an employment rate at 4.3, 4.4%, whatever, I can't recall exactly, and that's still historically low. There's not much noise in the claims. We get jokes later, of course. I think it would require a significant shift in the labour market indicators, either by magnitude or over the next couple of months. You know, a clear shift in deterioration in job conditions for the Fed to look more towards the jobs market again.
Well,
and
I was going to,
and we've seen that. Sorry, just to finish up on the rate expectations. We aren't expecting the next rate cut until June or July, and there's barely 2 priced into the curve for the entire year. So I think that tells you that the market is reasonably comfortable with where the labour market is right now. If the market feared, you know, that things were really going to start tanking and unemployment was going to start shooting higher, I think we'd start seeing that in the rate strip, and we're just not seeing it yet.
Yeah, and so okay, so you bring up a great point, and I want to actually dive into this a little bit more before we head off to another topic. The Fed is, how should I say? They are screwed. They're screwed. They even highlighted it last year. You know, they're going to be faced with this issue where they're going to have a slowing labor market, sticky inflation. And if you're the Fed, where's your focus? And right now it is inflation, because the labor market is tight-ish right now. But
it's tight for the wrong reasons in a way, isn't it? Because the labor supply has collapsed as well as the demand has fallen. So
sure,
you could argue that it's tight, but it's tight for the wrong reasons. But anyway, that's another debate.
I 100% agree with you on that. But let's just say between now and June, things really deteriorate in the labor market. We're seeing these, you know, constant layoffs from, you know, Amazon and other tech companies, and you know, the AI drag is a real thing. Maybe on our labor market, deflationary forces coming in. If you are the Fed in June, you have just try to think about what happens between now and the time Warsh takes the helm. You know, if you're faced with persistent inflation. Let's just say it for argument's sake. Let's just say it's still above 2%, but below 3%, but it's still sticky-ish. But you have a labor market that's really starting to deteriorate. Where do you go? Do you cut rates to support the labor market, or do you keep rates tight to make sure you continue to drive inflation back below 2%? What do you think?
That's the classic conundrum, isn't it? And I think, well,
it is.
What we saw in the second half, in the later part of last year, was that the Fed definitely erred towards the labor market, and they were lowering rates more as a kind of insurance. I think the term was used at the time, insurance cuts, because they felt that the labour market was at the start of a tipping point, if you like, or certainly it was going to deteriorate. We haven't really seen evidence of that borne out yet. I think if the Fed does think that unemployment is going to spike up, they will act. I think they showed that at the end of last year. However, they do have to balance that with the fact that the economy's, on a macro level, the economy's in pretty good shape. We're tracking growth. I mean, the Atlanta Fed is tracking Q4 growth at north of 4%. That's real growth. So that means nominal growth is what, 7% plus. The PMIs that just came out this week show that activity has started this year on a very strong footing, and all the signs point to re-acceleration, not deceleration. I think the Fed's hope is that they're kind of crossing their fingers that if the jobs market was to deteriorate, they would get a productivity boom in the next 6 months, or productivity would start to show up in inflation numbers. That would push inflation lower, and so with the jobs market going south, productivity pushes inflation down, and that gives them scope to lower rates. However, if that productivity impact is not seen and not felt, and you get the labour market falling, yet inflation sticking higher, that puts them in a real tight spot.
It really does, and that's going to be the I feel bad for Warsh. I mean, and he's well respected. I should ask you. I will ask you this question in 1 second about Warsh. He's really well respected. I sure as hell wouldn't want his job. How do you feel about? And I wanted to ask you. This is the question I want to ask you. How do you feel about his nomination from the Trump administration? Do you feel that he did it? He picked Warsh because he knew this is somebody that could actually, get through the Senate Banking Committee, or do you think he is there other reasons why he picked Warsh? What are your thoughts there?
I was just discussing with Ryan before you came on. I think, as per Trump's interview, I would encourage you to go and see it. He basically said that he nominated Warsh because he felt that Warsh could do his bidding and get rates down. If he didn't think that Warsh was that man, then he wouldn't have picked him. Now, he may have been joking, he may have been half joking. It's hard to tell sometimes. Yeah, I think it's not uncontroversial to say that if Warsh had gone into that interview with his future boss, the president, and gave indications that he was still the inflation hawk and the hard money guy that he was in his previous guys in the Fed.
Right.
Did we think Trump would have picked him? I suspect not. I don't think that's very controversial. However, he's only one of 12 voices at any vote, any one time. He's only one of 19 voices on the committee. You said he was well respected. That's true. He's not respected by everybody. I think his record he quit over QE back in 2011. And many people say he failed to read the room back then, when inflation wasn't a problem and unemployment was a problem, and he just misread that completely. That was back then. This is now. Rates aren't at zero anymore. So the balance sheet is an interesting one. He's argued for cutting the balance sheet, reducing the balance sheet. There are reasons to think that it may be laudable, but difficult to put into practice, given what happened in late 2019 when money market rates spiked up and reserves fell below, certain thresholds. These are technical issues which, in the current system that we have, the economy needs, large amounts of bank reserves in the system, and with the economy growing, reserves have to grow too, to keep the system functioning. can you cut the balance sheet in that environment? It's difficult. These are issues which he will have to discuss with his colleagues. He seems to have turned from an uber hawk to, let's just say, a relative dove. I'm not quite sure where this goes. Can he take the committee with him in lowering rates? I'm not quite so sure. It's going to be very difficult for him. What you can say about Powell, whether you agree with him or not, he did manage to sort of corral the rest of the committee with him and lead. You may not agree with where he led them, but he had the committee behind him. That's one of Wash's first tasks is to establish himself at the top and own his chops, if you like, and his credentials.
You know what I found, and this has nothing to do with his abilities to lead the Fed, but one like potential headwind, and I know this we want to talk controversial. I know who his father is, Kevin Warsh, but him being named in the Epstein files, even just being named in the Epstein files, do you think it takes away some of his credibility?
Credibility in the eyes of who? I mean, I think his nomination still has to go through Congress, right?
Yeah.
So he had to be approved. I haven't read too much about what various senators and lawmakers are saying about that, but the nomination will have to be approved by Congress. So you would imagine that those who are approving him or not will be doing their due diligence and homework in that. I think we'll probably learn more about that in the coming weeks. If there is an issue there, it will no doubt be flagged. You would suspect. So.
Yeah, that's one of those things that I think about when I heard his name, over the weekend or a couple of days ago, and I was like, he was named in the Epstein files. I'm like, ooh, gosh, is that the timing of that is not good, and it's not. You guys can feel however you feel about that particular issue, but the fact that he was named, I'm wondering, is that going to be an issue for his nomination moving forward? That's really.
Of course, it depends on the context in which he was named. I haven't, cards on the table. I've not read anything about why he was named or in what file or how he was named and what communications it was. There are many people named in those files who are perfectly innocent of any wrongdoing. There are those who aren't, of course. I think it remains to be determined in what context his name cropped up in those files. If it's perfectly innocent, you wouldn't expect it to have any bearing on his nomination approval. If that's not the case, again, that's for the lawmakers to determine.
Yeah, and that's the thing we always have to keep in mind. Just because you're named in these, in these files or whatever, doesn't mean there was any wrongdoing. I mean, it's a small group of very powerful people. Some nefarious, probably more nefarious than others. Others are just innocently like, hey, I was just in the room, at this big party, that type of thing. So who knows? But hey, I want to turn the subject matter over to this weekend really quick, because I think the yen is in everybody's view, especially. Not just for currency traders. This is not just a currency trader headline. This is for everybody, because there's a big talk. There's always talk about like yen carry trade. If you look at like some of the way the yen's moving against a lot of different currencies, the Aussie, the Kiwi, we're at like all-time high levels. That means those are again all-time highs against the yen. And then you have the snap election in Japan, where Takeichi might have a stronger support for fiscal dominance, if you will, and there could be a risk to the yen coming to this weekend. So, what can you tell us about this weekend's election in Japan, and if that's something that the market should be concerned with?
Well, you've just laid out exactly why the yen is so weak. It's the fiscal fears are back now. You could argue that the fiscal fears and concerns in Japan never went away and have been front and center for the last 20, 30 years. But as you say, the Prime Minister has pledged to spend, increase spending. There are tax cuts in her proposals. And the market is seriously questioning whether Japan can, even Japan, whether it can take that load, and the yen's bearing the brunt. I think last week we had the BOJ, or sorry, the New York Fed checking rates on behalf of the Ministry of Finance. That sparked a 3.5–4% rally in the yen, which is pretty impressive given that they didn't spend a single cent. However, we're back at what, 157 on dollar yen, as you say, versus other currencies even weaker. And I think we're certainly back in intervention territory now. The dollar yen is back, it's nudging back up towards 160. The market clearly feels that any further fiscal loosening is, at this current juncture, highly irresponsible. And you only have to look at not just the yen, but the JGB yields, the 30 and 40-year yields have exploded in the last 3 or 4 weeks, as this has all come out, and she's called the snap election. Is it a case of buy the rumor, sell the fact? Were she to win, would markets sort of calm down because this is kind of in the price? I don't know, but it's pretty precarious, and I think the Japanese bond market and the yen are at very, very, very weak levels.
And there's this idea, Jamie, that if she does have really strong support following this weekend's elections, it could actually end up being ironically good for the yen, strong for the yen, because she doesn't have to push the fiscal envelope so strongly. So I'm really interested to see what the price action is going to be after this weekend, because I think the elections are on Sunday, if I'm not mistaken.
Sunday.
In Japan. So we'll get the Sunday in Japan. Yeah. So when will we first get dollar yen? When will we first see the reaction? Yeah, we should see it. I think we should see it probably right at the FX Open on Sunday, because it'll be Monday morning in Japan, and we'll probably get some good pre-market readings as the markets open. I'm going to tell you guys this from a currency trader point of view. I'm not going to have any yen exposure going into this weekend, because I think the expectations versus what can happen, but expectations of what may happen with the yen are a little convoluted at this point. So it's a bit of a coin toss.
Well, I mean, just on that, I mean, as I mentioned, we had last week the New York Fed checking rates. Okay, it doesn't do that very often.
It doesn't, and it's not very often when the Treasury and the Ministry of Finance are kind of in coordination about this type of thing, right?
No, we've had clear statements from U.S. officials. I think Treasury, possibly Bessent himself, I can't recall, clear statements saying that they are not interested in coordinated intervention.
So well, he said they absolutely did not intervene, but I think that they got the green light. It's one of those things. The Treasury wants to not be involved, but they also don't like a stronger dollar, even though Bessent says we have a strong dollar policy, because that's what Treasury secretaries are supposed to say by the laws and guidelines of the United States of America. I'm being a little sarcastic.
It's a tricky one for Bessent, isn't it? Because, as you say, they don't want the strong dollar. However, what they also don't want, and we saw signs of it a week or two ago, is a dollar crash, or a rapid snowballing of selling dollars, selling treasuries, and that sell America trade coming back into markets. They don't want that either. So if Japan was to intervene on dollar yen and push dollar yen down, and that drags the dollar lower, the Treasury doesn't want extreme volatility and distressed selling of dollar assets either. So it's a pretty delicate balancing act.
Yeah, it is. It really is. Well, Jamie, I love having a chat with you, and it's been a while. Matter of fact, how are your kids going in club soccer, by the way?
All good. Still playing.
That's amazing. He hung up his cleats after his senior year. He got a few offers. He actually got a couple of smaller D1 offers, but he decided to go to Ole Miss and be a fraternity boy. So that's what he's doing currently. So he's enjoying life, and he's enjoying old Mississippi life. So, but
Great to hear
hey,
it. Fantastic. Well, he can
yeah.
always still play, of course. You know, just because you don't pursue it as a career. You know, you can always play, always play.
Yeah, always play. And that's, I have friends that are in their 50s, as I am, that still like to play men's leagues. And that's a great thing, the greatest thing about soccer. So all the best to you and your little ones. And hopefully their careers will continue even further than my son's. But hey, I wanted to say it's really been a pleasure catching up with you. You're such a valuable resource, not only to us on X or on Twitter, but to Reuters and to the financial markets community. I highly recommend that you follow Jamie. He's been one of my, I want to say I've followed you probably for over a decade now, and you're one of my go-to people as far as understanding exactly cutting through the shit, what's happening in the markets at all times. So make sure you follow Jamie on X. He is. Let me make sure I got that right. Reuters.
Just a public service announcement. I don't post on X anymore. I kind of binned that. However, you can see all my stuff on Reuters.com.
Yeah. Okay. Well, there you go. When did you stop posting?
About a year or two ago, a year and a half ago.
I guess you did about a year or two ago. Holy cow! I've caught up with you since then, and how come I didn't know that you're not even doing that on X anymore? So, but I actually end up reading your articles all the time on Reuters. So
yeah,
that's where I keep seeing you.
My stuff is posted by Reuters account and various Reuters X accounts. So my stuff's out there on X, certainly.
Yeah. Well, awesome. Well, Jamie, it is really awesome to have you here. Thank you so much for blessing our community with your presence. I do appreciate it. I'll be reaching out to you here over the next couple of months, and bring you back, see where we're at, see where the markets are at. One thing that's I think we can both guarantee all the listeners here is 2026 is going to be full of volatility and a lot of surprises.
If the first month of the year is any indication of where the next 11 are going, then hold on to your hats, buckle up.
All right, Jamie. Hey, have a great one, and thank you so much, everybody, for joining us. If you're in the Forex Analytics community, I'll see you in about 13 minutes on the Morning Edge. Jamie, great to see you, and all of the best to you, sir.
You too, Blake. Great to catch up, and look forward to doing it all again soon.
Absolutely. All right, guys. Have a great day. Good luck, everybody, through the ECB press conference, and I'll catch you guys